Good morning and welcome to the 80th Securities Fundamentals Update. The US dollar was broadly lower yesterday against most major currencies ahead of the FOMC Meeting Minutes, which will be released later tonight. The Federal Reserve is unlikely to change its current policy and likely to continue with its tapering program in its next meetings. However, eyes will be on the earnings season, which will show how the companies operated with less government support. On the other hand, gold prices also managed to spike further, reaching as high as 1,314 due to the tensions in Ukraine. And meanwhile, the next weekly technical resistance stands at 1,320. During the Asian session today, there were few economic releases from Australia, leading to further gains in Aussie dollars above 93.70s. Westpac consumer sentiment increased by 0.3% in April, comparing to a decline of 0.7% in March. But most importantly, Australia's home loans increased to the highest level since 6 months, rising by 2.3% in February, comparing to nothing in January, while it had been anticipated to rise by 1.7% only. Going forward to the European session today, we'll be focusing on two trade balance figures from Germany and the UK. German trade balance surplus set to rise to 18 billion in February, up from 17.2 billion euros in January, while the UK trade balance deficit set to narrow back to 9.3 billion pounds in February, down from 9.8 billion in January. As for the US session today, wholesale inventories may rise by 0.5 in February, comparing to a rise of 0.6 in January. But most importantly, again, all eyes are headed to the FOMC meeting minutes today, which will be released at 18 GMT time. This is it for today. Stay tuned as we will be publishing our Q2 fundamental forecast for the US, UK, Eurozone, Australia, and Japan, and also Canada. Follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Have a good day.